Good morning, everyone. Thanks for joining us this morning. We're glad you could join us here on a Thursday morning. We'll be joined shortly by Craig Geiger, our regional rep from Lincoln Financial Group. I know Craig's been in the business for a long time, so glad to have Craig on this morning. We're going to be discussing some of the new plays that Lincoln Financial is offering on their indexed annuities. They have a brand new strategy they've recently introduced, so we'll be discussing that. And then if they do have any questions along the way in my presentation or Craig's, get those typed in. We'll get those answered either beforehand or afterhand regarding the meeting. I'll be giving everyone a call post meeting, so everyone's going to get a call from me that did attend today, and we'll review any questions you may have at that point and get the information out to you that you will need to further your pursuit with Lincoln Financial. So we'll go ahead and get that here post meeting. I'll be giving everyone a phone call after the meeting itself. But otherwise, appreciate you joining us today. We've got a lot of information we'll be discussing here. Probably try to keep this to about a half an hour in duration regarding the webinar itself. We at IAMS continue to offer some nice producer builders, great incentives you can receive from IAMS based on your production levels in the first 180 days of being contracted. We have anywhere from cash up to Retirement Boss radio program. We also have different seminar systems you can choose from based on your levels of business, and we'd be glad to keep things rolling on that end. And one of the key things, of course, when you are running good business is to keep the flow of new prospects coming in, and that's why we think that some of these different choices are extremely valuable to you as an agent in the field or to increase your volume of business. So definitely keep that in mind when you're looking at the different builders you can utilize based on IAMS. We also have our referred producer program. You refer agents to IAMS, you receive a $50 bonus up front when they get contracted. You also receive a override based on their business, and based on indexed premium, you'll get a 20 BIP override. Life targets 15 basis points, and then MYG business is 10 basis points based on that referral business. We also have our market reimbursement. We reimburse $100 for every $100,000 of indexed annuity premium, $200 for every $100,000 single premium life. It's a great way for us to build up a nice bank account for you. You can utilize based on your advertising, and we reimburse half your costs. So if you submit a bill of $1,000 based on maybe a mailing you did, we'll reimburse you $500 of that out of your account. And then, of course, the more business you write, the more money you'll have in your account itself. So definitely a nice feature we offer through IAMS. We help you out with that advertising cost by co-opting some of those costs with you. We also have a great back office support team. We have a number of individuals in the new business team, creative teams, administrative side. We have a great marketing staff, and lots of years of experience on the marketing side. So we have individuals who've been here 10, 15, 20 plus years. So a lot of valuable information you can get from them. We have a solid life insurance marketing team also. So if you have interest on the life side, we have a great group of individuals on that end. We also have a group in the wealth management side that can help you out with your security side needs based on that side of the business. We do have a Firelight available as a e-app system. You can utilize Firelight based on your needs, and most of the carriers do offer it, including Lincoln Financial has that as a available e-app system. Really simple to use. Once you get used to using Firelight, it's really a no-brainer. You don't want to go back to writing apps out anymore, and we do have a number of agents that consistently utilize the e-app system. So really a nice program there. We have, as I mentioned, our creative team that can help you out with doing any number of items. Maybe you need a website development. Maybe you need some help on email blasts, mass mailings, doing digital marketing. That's really big right now, using digital marketing on social media sites. Definitely a high-end side of the business right now. We see a lot of agents utilizing that to get in front of more clients. So that's something we can help you out with. Maybe you want to redo your company design, redo the colors on your logo, whatever you might want to get done, they can help you out with that. So We've got a great creative team that can help you out with all that information. Definitely contact them on that end. We also have a website we've had in play here for a number of years. Really valuable resource you can go to get supplies, look up rates, do income quote comparisons, look up the best rates on MIGAs, do term quotes, a lot of stuff you can do on our website. So www.imsinc.com, great location. You can pick up valuable information based on different other sites like your AM Best reports, company, state insurance department websites. A lot of that information is available right on our website. So definitely take a look at that. We also have our latest annuity rates on there that gets updated at least once a week. So we get that uploaded as often as possible. That way you do have those current rates on that end of it. We also have a software program called the Retirement Analyzer. Really good piece to utilize with clients. It's a full software program, has great output, great reports it prints out for clients' needs currently, what their future needs may be. You can plug in all kinds of variables. You can throw in health situations. A client's going to buy a vehicle when they retire. You can throw that in there, whatever you might want to do. That is all available there on that Retirement Analyzer software program. And we have a number of agents that use that all the time. Really a good piece to utilize. So keep that in mind. As I mentioned a little bit earlier, we do have a wealth management team. Charles Hiring Jr. We have Mike. We got Zach in that department. Some really good stuff there. I'm going to launch a quick poll. If you have interest in looking at the wealth management side of IMS, we'd be glad to have one of our specialists give you a call, and they can go through some of the platforms we offer, help you out with the testing. I know getting that Series 65 test passed can be a challenge. They can help you out with the resources you would need to utilize to get that done. But if you do have interest in pursuing the wealth management side of the business, I know a majority of our top 20 agents that do business through IMS are also licensed, securities licensed at the same time. That way they can give their client the full portfolio of plans they might have interest in utilizing. Hate to have, part of it uncovered where you refer someone down the road, that client ends up rolling down the road themselves. You definitely don't want to have that happen. You want to keep as many arrows in your quiver as you can, and having the security side of the business is really valuable to yourself, keeping your clients happy. So something to keep in mind on that end. If you have interest in getting some more information on the wealth management side, check off yes. We'd be glad to have one of our specialists give you a call. We have seen a big increase on the number of agents dabbling on the security side. We also have seen a really good run in the stock market the last 13 years. It's been on a pretty good consistent run since 2008. That trend will continue. We'll see what happens the next couple of years, but definitely something to keep in mind. We'll go ahead and close that up there. We offer our Top Producer Summit meeting. It's coming up in 2022. It's a 18-month qualification, actually 19 months. It started in December of 2020. It runs through June of 2022. So you got a little bit over a year left to qualify for that Italian Mediterranean cruise. We're going to be starting in Rome and cruising around the Italy. We'll be stopping in Greece, Croatia, a lot of great locations they'll be stopping that boat at, and should be a fantastic cruise. I know we have a lot of agents that are on pace to qualifying, and they are extremely excited to be on that trip. So it should be a great time had by all. If that's something you have interest in, definitely start getting your points built up right now. It takes 4.5 million points to qualify, and that production qualification does run through the June the 30th of 2022. We also put on our life and annuity academies. I know we've had a very successful time at these. We put these on about once a quarter. We're actually doing our first meeting here the end of September, and should be a really solid meeting we're going to hold in Des Moines, and that's coming up the end of September. I know we're running very limited on space. If you would like to attend one of our meetings down the road, check off yes. I know we do these about once a quarter, and probably won't do another one until the beginning of 2022. It's a 2.5-day meeting. We fly you in, we put you up at a nice hotel. You attend basically 2.5 days worth of meetings, provide all the food, all the drink. Everything is taken care of. Transportation to and from the meeting location is taken care of from the airport. If you drive in, we'll take care of your mileage. We do take care of all assets based on that situation. So keep that in mind. If you do have interest in looking at one of our future meetings, put on there yes. We'll go ahead and put you on the list as an interested party. We'll keep you posted on when our next meeting is dated up based on the dates that will be occurring. So as soon as we have those dates in 2022, we'll keep you posted. And we'd see a lot of really solid return on these meetings. A lot of the agents that attend have nice spikes in business shortly thereafter on attending the meeting. We have some really solid speakers coming in, some great lead information, good marketing information. A lot of really great detailed info will be covered at these meetings. So definitely worth your time to spend at these 2.5-day meetings. If you have interest, again, check off yes. We'll contact you today and tomorrow based on attending today's meeting. We'll kind of go over some details on what we're looking at for our future meeting locations and time periods. We'll go over that with you. If you do have interest, definitely check off yes on that. I'll go ahead and get that closed up here in a second. In about 10 more seconds to vote on that based on the next meeting. We'll keep you posted on the future dates. Just close that up here. We also have presence on Facebook and LinkedIn. You can see our Facebook address, also our LinkedIn address if you have interest in following what we have to say on either site. Definitely friend us on the specific social media site, and we'll be glad to keep you posted on all of future events. We do some specials we announce on the social media sites. They're not available to other individuals, so definitely something to keep in the loop on. Great information will be covered on that. Go ahead and bring on Craig. Craig, thanks for joining us today. Glad you can
thanks for having me, Matt.
Make it this morning. I'm gonna go ahead and change presenters here. So you are online now, Craig. You're up and running on your site. I can see your screen from my end right now, so you're good to go on that end of it. Craig's
Perfect.
been in the business for how many years have you been doing this, Craig?
23 years.
23. Man, I think I got you beat. I'm at 29. So you got another 6 years to go to get to my level of expertise, I'll tell you. But Craig does a great job with Lincoln Financial. He has been with them for a number of years. Really has some great information he'll be sharing with us this morning. And if you want to get started, Craig, you're on deck.
All right, appreciate it. Thanks again, Matt. And thanks to everybody for jumping on today's call. I know we're getting closer and closer to the holiday weekend, but I know you took some time out of your schedule to kind of hear about really our new index. And this is something that's been in the works for a long time at Lincoln. We partner with Blackrock on this index, and it's really what we feel is a way for us to invest and enhance our OptiBlend index annuity product series. Lincoln's very well known for having very competitive rates, but more importantly, also having very, very consistent renewal rates in those renewal rate years. Because we feel when you look at a contract, it's not all about that first year rate in the contract. It's about having that consistency with the renewal rate integrity to go along with it. And Lincoln, that's a big part of the Lincoln story. But when we think about, kind of where the market is and where the market could potentially be long term, the equity return forecasts are definitely pivoting more toward international equity going forward versus U.S. equity. And this is kind of an interesting thing to kind of walk you guys through is when you talk about markets, we all know markets are cyclical, right? If you look at the 1980s, international stocks outperformed U.S. stocks. And if we look at the 1990s, it was the complete opposite, right? The U.S. stocks outperformed international. You go to the 2000s, and it went back, and international stocks outperformed U.S. stocks. And then in the 2010s, as we know, is U.S. Stocks have outperformed international. The question is going to be: is in the 2020s now, is it going to pivot back to international equity? And a lot of the major money managers out there, including BlackRock, and if you think about State Street Global and J.P. Morgan, they're all kind of saying the same thing, and that's they feel that international equity long term is going to have maybe potentially higher market opportunities or more upside potential than U.S. equity, which is exactly what we built this index around, is to give you that global focused exposure, but also having inflation hedging strategies built within it. So what do I mean by inflation hedging strategies? Well, the two buzzwords that I'm hearing all the time when I'm talking to advisors across the country is taxes and inflation. That is the number one and two things that I'm hearing. And I think it all kind of comes, one, on the tax side, the Biden tax plan. We all know the tax rates are most likely going up. But on the inflation side, we certainly saw a surge in June, right? And we've definitely noticed it at the gas station. When we go to Target, we go to shop for anything, everything is going up in price, right? And we all know that inflation really erodes purchasing power. And so it's really key that any index that you're going to be allocated to really needs to have some important hedging fighting strategies built within it. And typically those are going to be, just based on history, gold and real estate. So having those in the index that you can pivot to, especially when inflation really starts to increase, is going to be a good thing. And that's exactly what the BlackRock Dynamic Allocation Index really is encompassing. It's encompassing equities, alternative investments, as well as fixed income. So it's going to be broken down into those three categories into 12 BlackRock ETFs or iShares. And I'll show you guys kind of the breakdown of the allocation here in a second. But when you think about BlackRock, why BlackRock? Well, BlackRock is the number one money manager in the world. They've got $9 trillion under management. 2/3 of those assets are in the retirement space. So they certainly understand our world. And when you think about, kind of looking long term, and I talked about how U.S. equities could potentially have not as much upside as international equities, think about the concentration risk we have right now just in the S&P 500. In the S&P 500 right now, there are 6 companies that represent 22% of the U.S. equity markets right now. And that's going to be Facebook, Amazon, Apple, Netflix, Google, and Microsoft. And if you think about it, they make up 22% of the U.S. equity markets right now. If you just go back to 2015, they only represented 10%. But yet right now they make up over 60% of the returns of the S&P 500. So there's definitely concentration risk right now when it comes to U.S. domestic equities. And so having some international flavor inside the portfolio or some international exposure is going to be a good thing, as well as, again, having some inflation hedging strategies built within it with that real estate and gold. So let me kind of walk you guys through exactly what I'm talking about. So if you look here in the holdings, this is exactly what is actually encompassed in the index itself. In terms of the equities, you got 3 equity components here. You got the iShares S&P 500 Core, so you're still going to get some domestic flavor there, but you're also going to have the S&P or the iShare EFA ETF, which is of course going to give you international equity exposure, as well as emerging markets being the other part of the equity component of this index. And then as you can go into real assets or alternative investments, this is where you see the U.S. real estate, and of course you see gold, and you see the gold. So those are the 2 things that are going to be really good inflation hedging strategies that are built within the index. And then of course you can see the rest is kind of made out of fixed income. But the key point key thing to point out here is that it's not just treasury bonds in this. If you look all the way at the bottom, it also has a TIP bond, which is an inflation protected bond. And it also has 2 corporate bonds in there. It has an investment grade corporate bond, and it has a high yield corporate bond in it. So it doesn't just have treasuries like most of these indexes today have. So it definitely encompasses a lot of different asset classes. It really gives you a lot of international exposure, obviously with the EFA emerging markets, but it also gives you that inflation hedging strategies with that real estate and gold. So definitely something to consider there, when you're thinking about, an index that can give you a good mix allocation. In terms of what our rates look like today when we launch BlackRock, so the BlackRock index itself really comes in two different versions. It comes in a 1-year par and it comes in a 2-year par. Now, based on today's current pricing environment, the 1-year par, in my opinion, is a better deal for the client right now. So with the OptiBlend 10 contract, you can see here at the bottom, it has a 100% par on a $100,000 premium or an 85% par if it's below that, which means that's what the par is going to be for that given year. So if you look here and we look at other type of contracts that are available, you can see if you want to go more shorter term on the OptiBlend 5, you're going to get about a 75% on a $100,000 premium or an 85% par on the OptiBlend 7 contract. And the great thing about Lincoln is it's not just about having one good index. We have a lot of different choices that you have at Lincoln. So when you think about that and why that's important is because we think diversification and choice are really, really important. And a great, I think, index to kind of partner up with the BlackRock index is going to be the 1-year S&P 500 daily risk control spread. Now, the reason I say that is because you're certainly going to want some domestic exposure, right? But the nice thing about having domestic exposure is the key thing we want to get, right, is the dividends. And our 1-year S&P 500 daily risk control is a 1-year strategy that's a spread that's uncapped, and the client gets the dividends included in the calculation, and it has no bonds. That is the key distinguisher. You're not going to get a lot of crossover on fixed income by putting these two indexes together to work together, because one, you're going to get one that's going to give you that international exposure as well as those inflation hedging strategies with the BlackRock index, but then as well still getting some domestic exposure with dividends, with no bonds, but with dividends included, but with no bonds, as a great combo, if you will, when you're thinking about a Lincoln allocation. So the reason I bring that up is because what I did is I ran a hypothetical quote here for you. I used the OptiBlend 10 contract, which is our flagship contract. I put a $100,000 premium into this contract, but I broke it down into a 60-40 split. I put 60% in the BlackRock 1-year par, which is 100% par currently. I put the remaining 40% in the 1-year S&P 500 daily risk control, and that only has a 70 basis point spread. Only a 70 basis points spread, which means the client gets everything above that number for that year. So if the return is 6% or 5%, you take 70 basis points off the top and the client nets the difference. And then on the BlackRock index, they get 100% of whatever that index does for the year. Now to kind of put this into context, just think of these three numbers, 5, 6, and 7. 5% is going to represent, if you think about a really, really bad 10-year market in recent memory, the first thing I think of is the lost decade. Everyone remembers the lost decade, even though the equity markets had more up years than down years, because those down years were so significant and took so many years to make up and get yourself back to even and then ahead, that typically most people were still negative. If you look here during 2000 to 2010, this thing averaged over a 5% return during the lost decade. And if you look at it in a really good market like 91 to 2001, it averaged 7.41 in that time frame. But to kind of put it in the context of a more, a longer term cycle of the market, if we go back just kind of to the beginning, on $100,000 from 1991 going forward, this thing averaged over a 6% return. So this is definitely built to try to give you a smoother ride across the board. But again, by leveraging the strengths of both indexes, the BlackRock index, obviously by giving you that global exposure, will also giving you those inflation hedging strategies with gold and real estate. And then on the domestic side, utilizing our S&P 500 daily risk control strategy, that's going to give you more domestic exposure with the S&P, but with the dividends and no bonds. So again, not a lot of crossover there. So definitely something to consider when you're thinking about, mix allocation when it comes to Lincoln. And then obviously at the end of the day with inflation, we know we can't manage for inflation individually, but we can plan for it with how we invest. And so this is, to me, is a great mix allocation to consider, especially for your pure accumulation business, or maybe even your bond fund fixed income alternative type business when it comes to Lincoln. And at the end of the day, though, like I talked about earlier, it's not just about having a lot of choices and a lot of competitive index strategies. It's also about your renewal rate integrity and having that product stay competitive after that first year. Lincoln's one of the few companies out there that has a really good reputation on renewal rate integrity. story. In fact, we put it in pieces that we actually can send out to you that kind of talk about how consistent we are with our renewal rates. And as you can see here, this is one piece that talks about on the OptiBlend 10. We've also created a new piece that's really a redacted statement of a live policy at Lincoln right now in OptiBlend 7, where the client actually allocated all 4 of our indexes that were available at that time. And we actually show, what the client started out with. And then actually all the way in the back, you're actually going to see what the client actually renewed at during COVID. So kind of showing that consistency that Lincoln is committed to certainly having competitive products in the first year, but really being committed to having a strong renewal rate integrity. And that's a big, big part of the Lincoln story. And then obviously it's all about the company that you do business with and you partner with. And Lincoln's one of the top carriers out there when you consider all the different products that we're in. We're in the fixed index annuity marketplace, fixed annuities, variable annuities, the RILA business, the money guard, life insurance, 401k. So we're a very, very well diversified carrier with very strong ratings, a very high Comdex score. And really, when you think about assets under management, we're in a better place now than we were even in 2008 if you look at 2019 numbers. So it's definitely something to consider when you're looking to partner with Lincoln. And with that, I'm going to throw it back to Matt to close us out. Thanks so much.
Hey, appreciate it, Craig. Now, the Blackrock strategy, was that just recently introduced then? Has that just come out recently?
It came out last Monday. So yeah, it's fresh off the press. Correct.
Right. And it's obviously going to be a situation where if an agent wants to write it, they'll need to download the new application with that strategy available on there.
Correct. And the new brochure that's now on the microsite does actually include it now. So as you can see here, it does include the 2 BlackRock indexes on the new updated OptiBlend brochure. So it will be available for them to see there on the brochure. And then the new application will have now that as an option that you can select.
Right. And this BlackRock's only available on new written business. It's not going to be on renewals for other contracts.
Correct. Correct. Yes, only on new business going forward. But like I said, when you're thinking about a good mix allocation, I really do think that 1-year BlackRock index with 100% par on OptiBlend 10, and then kind of partnering that up with that 1-year S&P 500 daily risk to, again, give you some domestic exposure, but with the dividends included in the calculation and no bonds. We found that's probably the best way to partner those up and kind of really leverage the strengths of both of those indexes in one allocation.
Mm-hmm. Now that Fidelity strategy, is that also heavily domestic weighted out on that strategy also?
It is. It is. And the nice thing about the Fidelity Index is that, it's a 1-year par. So certainly simple to explain to the client in terms of how it works. But more importantly, it's 125 blue chip dividend paying stocks with fixed income being the treasury side of it for the volatility. But more importantly, we actually publish that stock listing report for the advisor to see. So they actually can see which stocks are in that index and what percentage weight they actually make up in the total index.
Cool. So in those agents out there that like to utilize, more than 2 strategies, that Fidelity is also a good option to look at if you want to throw a third one in there and maybe do like a 30-30-40 split based on the 3 different strategies. So definitely a great combo there. And the good thing about Lincoln is they do allow a 10% free withdrawal in the first year. Is that still going on strong there, Craig?
Correct. And an area where we definitely see growth, Matt, is for people that are maybe looking for a non-income rider solution for income. A lot of advisors are utilizing the OptiBlend 7 or the OptiBlend 10 contract and taking a 5% spend down right out of the gate, or maybe they're taking a 5% spend down later and be able to create that income for that client, be able to put them into a contract that's got competitive caps, has competitive pars, has a lower spread. So there's more growth opportunity for the client to continue to build and grow that account value. And then, of course, save themselves that 1% rider fee and have a ton left over potentially for the beneficiaries when they pass. So
Right. And if you remember that slide that Craig had up on the worst 10 years and the best 10 years, there wasn't a lot of difference there. If a client is taking out 5% of their value, there's a pretty good chance that their policy is still going to be growing because that worst 10 years was still above 5%. So that's a nice thing to remember. Even in the worst decade that was out there, the clients still made more than they took out if they're taking out 5%. So that's a pretty good story with clients. And I mean, I'm all about saving money on those fees. So what happens when clients get their annual statements and they see a negative coming out, and if the market did not go up that year, which is bound to happen every now and then, their value actually goes backwards. But if you don't have a fee and you're, taking out your 5%, the only thing that's coming out is the money they've actually taken out themselves. It's not the money that's going, back to the company based on those fees. This is a great story. I mean, I like this a lot, Craig, and we do see a number of agents going away from income riders that have fees and staying with these accumulation plays. We've seen a big movement in the market where a majority of agents are selling accumulation plays, not specific income plays. So definitely a nice item there. Anything else coming up on the Lincoln side, Craig? You wanna hit on before we end the this morning's call?
That's pretty much it. But what I will be doing to everybody is I am going to send Matt an email that will be prepackaged with all the materials that we went over today with a couple hypothetical quotes, one for pure accumulation, and then the other one will be kind of more of a grow and spend type of idea, utilizing this 60-40 split with the OptiBlend 10 contract, as well as all of our renewal rate pieces, our rate sheets, and everything about Lincoln. So you'll be able to get an email from Matt that'll have everything in one email that'll encompass everything we covered today.
Right, and I just launched a quick poll also. We'll leave this open for a couple of minutes. If you want to get additional information sent out to you, I'll go ahead and send that piece that Craig's saying to me. Also send you a brochure and licensing information if you're not licensed up with Lincoln at this point. And it's another, I mean, it's a really strong financial company. They're A+ rated, and they're probably the strongest company we have financially that IMES offers. So if your client is into financial strength, which a lot of them are right now, Lincoln is a no-brainer. And with the rates they have, with the new strategies they're coming out with, it's definitely it's a win-win for all parties. So if you do have interest in getting some additional information, mark off yes. Of course, I'll be giving everyone a call that was on today's meeting. So we'll get in touch with you regarding the information we discussed, but definitely mark off yes if you have interest in getting some additional information. So looks like a lot of people have already voted, but there's a few that have not. If you want to get some information on Lincoln, I'd be glad to get that out to you. And then we'll include those brochures and info pieces on the strategies. Some great stuff that Lincoln's offering at this point. I'll leave this open for about another 20 seconds or so. But otherwise, Lincoln Business counts towards our IMES trip, to Italy, and it's a nice win-win for you and your client. They're getting a great company. You're getting credits towards our trip. Really a great combination. You do have about a year left to qualify for the Italian cruise. That goes through June of next year. And I think we've seen a real nice business block coming in the even in August was one of our biggest months ever. Have you guys been seeing a pretty good, bust out of business this year, Craig, post pandemic?
We really have. I think the first couple of months it was still kind of slow, but definitely there was definitely a lot of momentum that carried into the summertime. And yeah, sales are definitely way up. It seems like a lot of people are trying to, de-risk their portfolio a little bit because they're all kind of concerned about market volatility and, kind of where the market could be in the next couple of years. So absolutely.
Well, great. I'm glad to hear that Lincoln's doing very well, and I know that they've got a great new business team. They do a great job on getting the business through, and we'll look forward to a strong finish to 2021, and we look forward to a prosperous start, moving into 2022. So appreciate everyone joining us this morning. Everyone have a great Labor Day weekend. Enjoy your time outdoors. I know the weather will change eventually, but enjoy the fall. Fall months are great, so enjoy that. Otherwise, everyone have a great long weekend, and we'll speak to you soon. Bye now.